Hey everybody and welcome back to my channel. I'm super excited to share with you today 3 basic trading strategies which are perfect for beginners. We'll cover trend continuation trading, reversal trading, and breakout trading. So whether you're just starting out or you're looking to sharpen your skills, then this video is for you. I've been trading for over 5 years now, and on my channel I like to share educational tips related to trading as well as an insight into my journey as a Forex trader. I recently published this video which talks about trading and tax, and this video has generated a lot of questions from you guys, questions that I don't feel qualified to really answer, as I am not an accountant or a registered financial advisor. So to help guide you further, I recommend this website, unbiased.co.uk. Unbiased hosts a range of different independent financial advisors, including tax advisors, accountants, pension advisors, and even mortgage brokers. Unbiased match your requirements against the UK's largest directory of independent financial advisors, whom are regulated by the Financial Conduct Authority, helping you to find the right advisor for your needs. It's free to get matched and it's quick to find the right match for you. It only takes moments to connect to an independent financial advisor. Every year, more than 3 million people use Unbiased to find advice that they can trust. So if you have any specific queries or questions, especially if you are from the UK, go to unbiased.co.uk to browse over 27,000 regulated independent financial advisors, mortgage brokers, and accountants. All be matched automatically to the best one for you and receive a call. I have got a link below in the description if you want some more information, and without further ado, please remember to like, subscribe, comment below, and let's get straight into the content. This strategy involves finding an existing trend and trading in the same direction. To trade trend continuation, you will first want to identify whether the market is indeed in a trend. You can do this a number of ways. My favorite way is to use price action, looking at candlesticks and market structure. If you prefer, you can utilize an indicator, a trend-based indicator, such as a moving average or a MACD. And here is how it works. Step 1 is to identify the current trend direction on a larger time frame, such as the daily chart. So going from the lowest point here, you can see that using price action, price is making higher highs, higher lows, higher high, higher low, higher high, and it currently seems to be making a pullback. So for the daily time frame on your USD, price is currently in an uptrend. Once you have identified the trend, you can drop to a faster time frame to look for points where price may be pulling back, again utilizing either price action, looking at market structure, or by utilizing an indicator such as a moving average. So here on the 15-minute time frame, I've added the moving average, and you can see we've got this nice upward curve indicating the uptrend. And you can simply follow price and wait for a retest of this moving average, as we can see here, to set an entry for a long with a stop below the previous low and targeting a break past the high. Alternatively, you can use drawing tools and pure price action to look for breaks, for example, of a trend line to get in for a position. Enter the trade in the direction of the trend and set your stop loss below the recent swing low, aiming for a target past the high. A quick tip, always confirm the trend on multiple time frames and always use risk management to protect your capital. Next, let's talk about reversal trading. This strategy involves identifying points in the market where the current trend is likely to reverse. To trade reversals, you want to look for signs of trend exhaustion and potential reversal patterns. Again, this can be found in price action, utilizing candlestick patterns such as double tops, double bottoms, and head and shoulders, or you can utilize different indicators such as the RSI, the Relative Strength Index. And here is the process. Here I am on the daily time frame for pound dollar. And first of all, I want to look for a key area, a support or a resistance where price has reversed before. So as we can see here, price had been coming up. It then ranged, it consolidated for a while, and then we got this big drop down, this reversal. So this level here has previously acted as a reversal point in the market. Moving this on, we have a very interesting double top pattern at this level. Price had been in an uptrend here, making higher highs and higher lows. Came to this point, we got a double top at this key level, and then price started to sell off. In fact, you could also say that this is a head and shoulders pattern, as we have the left shoulder, we have the head, and we have this right shoulder development here. Enter the trade when the reversal pattern is confirmed. This little bearish pin bar would have been a brilliant place for an entry for a short, with a stop above the high here and targeting a break of the lows. Remember, reversal trading can be tricky, and it is not the most recommended strategy for beginners, as it takes a lot of time to really identify the patterns and, more importantly, avoid false breakouts. Finally, let's explore breakout trading. This strategy aims to capture large price movements that happens after the price breaks through a significant area or resistance level. It can be similar to trend continuation or reversal, except for with breakout trading, we're relying on the momentum that happens, the extreme push that moves away from a level. To trade breakouts, simply follow these steps. Identify a key level, support or resistance level on your chart. Wait for price to break through these levels with high volume. Enter the trade in the direction of the breakout, remembering to place your stop loss below a suitable support level. Here I am on the daily time frame for USD yen, and I have drawn this horizontal line across representing this key daily level. We had 2 taps here, and price has been consolidating underneath this level until recently we got a break and a close above this level, indicating a potential breakout. From this, I could drop to a faster time frame, placing an entry near this key breakout level and a stop below price action. A tip for breakout trading is to utilize an indicator such as the RSI to help avoid entering on a false breakout. And once again, remember to manage your risk effectively to protect your capital. So there you have it, 3 basic trading strategies for beginners: the trend continuation, reversal, and breakout strategy. What's your favorite strategy? Let me know in the comments below. Remember, each of these strategies offer unique opportunities, and they also require different skills, but with practice, they are able to be mastered and to make money with. If you found this video helpful, please help me out in return by giving it a thumbs up. Remember to subscribe to the channel below, and I'll catch you in my next video. Thanks for watching. Bye.